In the previous video, we tried to put some costs together for an iPad. And what that came down to is what's called product and period costing. So let's have a look at what we already know from Unit 3. What we already know is that when we buy stock, we're going to incur some expenses from suppliers incurred in acquiring stock and getting it ready for sale. And we call those cost of goods sold. So we have things like cost of sales, cartage in, the packaging, the buying expenses, and customs duty. We then had costs involved in running the business every day, which is essentially getting stock from the store to the customer. So not literally, but every little thing that's involved in running our business so that we can sell stuff to customers. And we called those other expenses. So they were things like cartage out, carry bags, advertising, vehicle expenses, rent, wages, insurance, all that sort of stuff. What we're going to do in Unit 4 is change it a little bit, and what we're going to say is we've still got cost of goods sold, which is still all costs or expenses incurred in acquiring stock and getting it ready for sale. We're going to divide it into two parts though. What we're going to say is there's the cost that we can allocate to each unit of stock. They're going to be what's called product costs. Now, we've also got costs that are required to get stock ready for sale, but sometimes we can't allocate those to each unit. So what we'll do is we'll call those period costs. You can see though that they're both going to be part of this group that's called cost of goods sold. That'll leave us with a third type of cost, which is what we've already been doing, or the cost required to run the business and get stock to the customer, and that's your other expenses. So looking at our example for the iPad, what we had was sort of three categories of cost. Under cost of goods sold, we have product costs, costs required to get stock ready for sale, which we can allocate to each unit. We've got period costs, the ones that are required to get it ready for sale, but we can't allocate to each unit. And then we've got the other expenses. So we had the cartage inwards, which is $1 per unit. That was required to get stock ready for sale, and we could allocate it. So what we're going to do with each of these costs is put it in one of the bins. We either got product costs, period costs, or other expenses. So let's put this one. That's a product cost. Required to get it ready for sale and can allocate it. Had the materials of the iPad, definitely required to get it ready for sale, can be allocated, so that's going to go in as a product cost. We've got the rent, $3,000 per month. So that's really not required to get stock in a condition ready for sale. I guess that's a cost incurred in running the business every day. So I'm going to whack that over here in other expenses. Got the packaging, which was $1 per unit. So the packaging that we put it in, so it's an expense for us. So that is required to get stock ready for sale. It has been allocated to at a rate of $1 per unit, so I'll put that in as a product cost. Advertising, $400 per month. It's actually not required advertising to get stock ready for sale, so the keyword is ready. Advertising is required to sell it, but only once it's already been made. So that's going to have to go over here in other expenses. We've got the buying expenses, $2,000 per month. Now, buying expenses are a cost of goods sold. So it's buying expenses, the costs incurred in buying all the materials and so on. That's clearly required to get stock ready for sale. My problem is I can't allocate that. So I can only call product costs the ones that I can allocate. When I can't allocate a cost of goods sold, I'm going to need to call that a period cost. So I'm going to have to put that in there. Lastly, we finish with customs duty, $3 per unit. Is that required to get stock ready for sale? It is. I've got to import the stock, and it has been allocated to each unit. So I'll put that in the product costing tab there. And now I've allocated all my expenses. So I've got the product costs, which came out at $205 per unit. I've got some period costs, which were buying expenses, and I've got two other expenses there. So what happens now is we have an income statement, and let's say the product costs were $205. I had one period cost, which were buying expenses. Together, they represent my cost of goods sold. I've also got other expenses of advertising and rent. And let's say now I make sales, I sell 20 of these iPads and I sell them for $500 each. So I've got revenue of $10,000. So 20 units at $500. We know that I go less cost of goods sold. And the first item we usually put, which is the main item, is cost of sales. So what is cost of sales? Well, cost of sales is actually product cost. That's that figure there. That is now a cost of sales. So if each product or unit costs $205, and I sold 20 of them, that's 20 times 205 is $4,100. Now I need to put any other costs required to get stock ready for sale, but the ones that I couldn't allocate. So that's where my period costs are going to come in. So what I'll do is I'll put my buying expenses here. There's still a cost of goods sold, even though I can't allocate them to each unit of stock. All that means is they don't become part of cost of sales. They still go in under cost of goods sold. So that will now give me my total cost of goods sold and a gross profit. Now I'll less away my other expenses, and I had the two. I had the rent and the advertising, and that'll give us a net profit of $500. So we've been able to allocate all our expenses here, and you can see where they go in the income statement. So let's just sort of have a bit of a sort of a matrix here that's going to help us classify all these costs. So let's analyze every cost as to whether it's required to bring stock into a condition and location ready for sale. Let's look at whether we can allocate it to each individual unit of stock, and then we'll classify it. So let's say we've got a stock that is a cost that is required to get stock ready for sale. It can be allocated, so that's what we're going to call a product cost. Let's say we've got a cost that is required to get stock ready for sale, but we can't allocate it to each unit. That's going to be a period cost. What if we have a cost that isn't required to get stock in a condition and location ready for sale, and it actually can be allocated to each unit of stock? Is that a product cost? It's actually not. Product costs need to be required to get stock ready for sale. So if we've got a no over here, automatically that can't be a product or a period cost. That's going to have to be another expense. What about if we've got a cost that isn't required to get stock ready for sale and it can't be allocated to each unit? Again, as soon as we see a no in the first column, that's going to have to make it another expense. So for every cost you get from now on, you just want to put it in this matrix or this table, and that'll help you classify each one. So that now gives us some formal definitions. How would we define each of these? So a product cost is a cost incurred in order to bring stock into a condition and location ready for sale. That's actually the exact same definition as a period cost. That's the same thing written twice. There's no difference in them right there. So I guess the question now is, well, how do I finish my definition to make these different? If they're both required to get stock in a condition and location ready for sale, how are they different? Well, the product costs are the ones we can allocate to each unit of stock on a logical basis. This word here is going to be very important later on, logically. It's got to be a logical basis, and we'll talk about that in future videos. Period costs, however, they're ones that we can't allocate to each unit of stock, either because it's actually not done on a per unit basis, or maybe there's no logical basis to do so. That leaves us with other expense, so all other costs involved in running the business on a daily basis and getting stock from the business to the customer.